When it comes to your money, having the right person in your corner can mean the difference between life changing success and utter failure. There's a lot of loud voices out there, gurus, experts, influencers trying to convince you of where to invest. I'm not here to tell you where to put your money, but I can share how I decide who I listen to. My approach consists of a blend of data, advisors that speak into my life, and my own research. All that results in my own bulletproof strategy that I'm going to outline here. I'll break down 3 levels that I've used to gain financial success. That's right after you hit subscribe, and comment below where your own best performing investments have been. More than 90% of people lose money picking individual stocks, and it's getting worse. The average person with a Robinhood account trading individual stocks, that's what they call a retail investor. They also call us dumb money, both behind our backs and to our faces. So the way people are taking advantage of retail investors, those people are the institutional money. The news, it doesn't help either. Headlines predictably cause FOMO and panic, drawing people into trends and triggering massive sell-offs at the worst times. Nearly 40% of people who pulled money out of the market regret it. These two are going to be guiding principles through these 3 strategies that I'm outlining: location and duration. Level 1, invest 15% of your income in the whole stock market and put your blinders on. The benefits of this is it's stress-free, low cost, simple. There's a high probability of success over a long time horizon. Now, the drawbacks, it's boring, there's a lot of FOMO, and you're only exposed in this plan to the stock market. That's going to take us to level 2. Level 2 is to get a broker and invest retirement in portfolio of stocks, mutual funds, and bonds. The benefit of this is you're going to get greater returns on average. It's just how the math lays out. It's more targeted, especially in a retirement plan, and the ability to account for risk over time with real data brought together by real experts. There's a lot of benefits to this when you really stack up the probability of people succeeding versus failing. You get to decide which side you want to be on. The drawbacks is that there's risk associated with finding the wrong advisor. So at the bottom of this video, I'm going to outline my steps to picking the right kind of person. And there's additional cost. So don't expect to get all this information and wisdom for free. Usually advisors, they're going to charge 1% to 2% depending on how time intensive their strategy is. And it's helpful to really shop around and find the right person. That takes me to level 3. This is the maximalist approach. It's our style. You're going to be your own air traffic controller. Picture yourself high in a tower, looking at all the different money coming in and deciding which direction it needs to go. And not every dollar saved in this strategy is going to go into one bucket, but you're going to have a plane come in and it might be going to gate 2, gate 3. So for us, it's 40% stocks, 40% real estate, 10% bonds, 10% alternative investments. And that's just some round general numbers. A lot of that's dictated by how the economy is doing, about the information that we're getting from our advisors. It's just a general blend. Some of that depends on the real estate market. As that goes up, your allocation of real estate is going to become a larger portion. Maybe you're going to be putting more stocks into your investment portfolio. A majority of stock market investments are in index funds for us. But 30 to 40% of our money is invested in mutual funds directed by our advisor with our input. So it's still passive, but I make sure I know what the strategy is and why. You don't need to be investing in something that you don't understand, and the education is priceless that we get from our advisor. So before you wave off this vanilla strategy that I take on and move on to the next stock picking guru in your feed on YouTube, consider this. If I were to present you 2 tables at a casino and one had a 5% chance of winning and the other had a 95% chance of winning, which would you choose? All right, to round things out, Here are my 3 steps to picking the right advisor for your investing. Number 1, find a fiduciary. This is simply someone who has your best interest first, someone who invests in their continued education, has a strong track record, and who has the proper credentials. Number 2, know how they get paid. Do they make commission? Do they have a fee structure on the account or on the growth? These are key elements you want to know because it's going to be a huge difference when you're comparing different advisors. And number 3, personality is key. Our pediatrician, as an example, was able to make things very simple and direct. And that's exactly what we needed when we were panicking about every rash and cough that our kids were going through. You can benefit from someone who can do the same thing for you when it comes to your money. Simple and direct accountability to stay on track and win with your money goals.